And to talk more about what sort of an impact are we expecting the Fed taper talks itself to have on the Asian markets, the commodities as well as the currencies, we are joined by Peter Cardillo, Chief Market Economist at Spartan Capital Securities. Good morning, Peter. Thank you for joining us on ET Now. This is Cheryl. I'm joined by my colleague Vinny as well. Let me begin by asking you the obvious statement that how do you see the markets now preparing itself for this inevitable taper? You have Federal Reserve officials now speak about it actually happening by the end of this year itself. How much of that looks like a possibility now? How much more downside left for the markets going ahead?
Well, I think it's a real possibility, and I also think that the market is just using this excuse to basically pull back a little bit. I think the tapering is not really the main factor here, but other factors are really what's behind the market's pullback. When I say a pullback, obviously I mean weakness that we've had in the past several days. We've had some weak macro indicators. The market generally is pretty high, and you also have to take into consideration that the weakness in the commodity markets basically a drag, and that's due to the fact that there's the fear of the virus that may bite into economic activity. So I think those are the real factors. I don't think tapering is really behind this, and I believe that the Fed, what we saw in the Fed minutes, may have been not a warning, but a test to see how the market would react. And of course, the markets that were really under severe pressure, obviously, were the commodity markets, in particular oil and copper. And so weakness in those commodities means over the next month or so, we're going to see probably inflation tick down a bit. At least that is the core rate of inflation. And so that means that it basically plays right into the hands of the Fed, which has been saying inflation is temporary, even though I don't think that's the case.
Right, Peter. This is Vinny also joining on the other side. So you've spoken about commodities, seeing the rise, but could we expect, how much more rise do we expect in commodities? And then you mentioned about it impacting the inflation. So do you think that is going to go on for the next couple of months? What is the trend that we can expect?
Well, if you look at what's happening in the price of oil, I mean, it really lost a lot over the past 4 or 5 days. And based on the present fundamentals, the price of oil is now very much undervalued and certainly doesn't belong around these levels. So it's a fear factor. And from a technical perspective, the decline that we saw witnessed yesterday puts us closer into a near-term bear market situation. And so it's going to take some time. And the same with copper. Copper has given up a lot over the past month or so. And again, based on the demand factor, it's undervalued. So I think that what we're really seeing here is just a run on unfounded fundamental problems at this time. So it's just a market being driven by the fear factor.